Happy Saturday, everybody. Guys, I believe that Nashville prices have peaked for the year. That's right. Last week, I talked about how I thought that demand has peaked for the year, and now I am predicting that prices have peaked for the year. I'm going to show you why in this video, and then, of course, I'm going to use data. It's super fresh data. It's data you can't get anywhere, and then you guys tell me what you think. You interpret the data. So, without further ado, let's get into the data. So the first things first, I want to start off looking at median sales price for May. Now you can see we closed 27.23. Now this is preliminary. There's still some stragglers coming in, so this number may change a little bit, but 479.9, I believe that's right where we're going to land. 27.23 in closed volume. This is 2% higher than it was last month. That's a strong showing for May. And if you remember, May was when we peaked last year. So where does that put us for prices? For price, you can see that it puts us down 4% for the year. Year over year, we're down 4%. And month over month, we're up 2%. So that's a strong showing, in my opinion, for May, because I predicted we would be down 5%, but we're not. We're down 4%. So keep in mind, that's still median sales price is down for the year, year over year. Why am I saying that I believe that prices have peaked for the year? Well, for one, I believe they peaked for the month and for next month because when I look at under contract, I see that our list price is $479 and $484. When I look at what our list price is for those that closed, it was $485. So our list price is dropped just a little bit on the contract side. And because we're still getting about a 1% discount from what's closing, I believe that we'll likely still hang in there with a 1% discount to what's closing. And therefore, we really won't see any price appreciation. Prices will be flat to slightly down for June. Okay, so that takes care of June. Then Ethan, why do you think prices have peaked for the year? Well, let's take a look at a couple charts here. One, let's start with our Middle Tennessee chart. You can see active listings at 5,500. We had a lot that expire and cancel at the end of the month, so we bounced back. We're now right back where we were before the end of the month. That's a strong showing. We can see that contract volume is continuing to tank. Guys, this is a bad sign for demand. Contract volume is now at 2617 from a peak of 3,044. That's down, 400? That's down 15%. I guess 15%. Yeah, about 15% from its peak. Demand is down pretty strongly. Active listings continue to go up pretty strongly. And you can see we can expect another accumulation of active listings, taking us really back to January active listings. And we're doing it at the same time that we're about to see, I believe, just a new low in demand. We're going back to January contract volume before we had that strong surge up. So you're seeing all that demand wane. You're seeing active listings increase. And we're seeing for June under contracts kind of be flat to where they were in May. That tells me that prices are about to soften. Now, when we look at forecasted close volume, you can see we're about 26 to 2,800 this month. We're going to be about 26 to 2,800 for June close. So you can see that we've stalled out on the closed volume. Our demand is starting to tank. Our prices have stalled out, and our active listings are going up. Guys, all that tells me is get ready. We are heading for price drops. Now, let's take a look at a couple of counties. Let's look at Williamson County. So Williamson County, look at active listings scorching. It's just going straight up. We're at 988. Now keep in mind, if we go back to 2022, you can see we peaked at 1,015 in Williamson County. Well, guys, we'll probably break into new 24-month high in active listings in really the next week or two. So in the next 2 weeks, Williamson County is going to break a new active listing high. At the same time, what do we see in demand? Demand is tanking again. So now we're starting to see demand just really fold from its peak of 466. Now we're down to 378, almost 100 down, well over 20%. Let's look at Davidson County. Same story here. Look at active listings. Active listings are skyrocketing. We're at 1765, beating anything we've had this year. Got to go back to 2022 to see a number like that. And you can see at the same time what's happening to demand. demand is tanking. Now, guys, Davidson and Williamson, they kind of carry Nashville's housing market. When we look at year over year pricing trends, we can see the outskirts of Nashville have had much stronger price deceleration or even price drops than we've seen in Davidson and Williamson. Davidson's only down -2% year over year. Williamson's actually up 1% year over year. This is crazy. But when I look at what I'm seeing with active listings and with one under contracts, it's only a matter of time before this starts showing into price. Now, let me say one other thing about these charts. When we look at contract volume in June, okay, we're looking at contract volume in June that will close, right? It'll close in July because it's contracts. And then in August, they'll do a report about July. Guys, you are getting stuff 60 days before people actually see it in the data. I'm reporting on things that you won't see for 60 days because of the way we look at leading indicators. So it's really important that you realize you're getting a cutting edge look at what is happening in Nashville. And if you want to wait for a canned report to come out 60 days from now, well past when it's relevant, you can wait for those canned reports, or you can get them here because I update and refresh this daily. I look for the leading indicators. I try to figure out where the market is headed, and then I try to make a case for why I think it's going the way it's going. So all that to be said, what I'm seeing is prices have peaked for the year. June, we're not going to see price appreciation like we saw in May, which, by the way, guys, you're going to hear everybody celebrate a 2% increase in May, and they're going to say, oh, price deceleration's over. The S&P Case-Shiller index came out. Oh, prices maybe, this may be a floor in prices. Guys, that's not what I'm seeing in the data. That's not what we're seeing in Nashville. And, come back to this video in 60 days, and you'll see, I believe prices have peaked. Now, if demand changes, if all of a sudden we get a shoot up in demand, could we see prices increase again? We could, but and people say, oh, but mortgage rates, they're going to go back down. Are they going to go back down? Why would they go back down if the the federal government is getting ready to issue $1 trillion in new debt? That pushes yields up. And when yields go up, mortgages go up. So I just don't see mortgage rates really dropping from here. Do they stay flat? Maybe. Does the spread between the 10-year and the mortgage rate kind of condense? Possibly. So with all that being said, it looks to me like we are headed towards a price correction. Now, let's zoom in on a couple other charts. One of my favorites. Let's take a look at by price band. So this is just Davidson and Williamson by price band. And you can see a couple things on here that I think are super interesting. One, for the first time in several months, we have seen a breakout in the under 700 active listings. You really have to go back quite a ways. You really have to go back to January before you see a number of 1,078 in active listings at Davidson Williamson listed under 700,000. At the same time, our $1 million listings continue their surge up, and 700 a million. Someone asked me about it, so I put it in this. Graph. But 700 a million, they just don't fit in the graph. It's not that they're not relevant. I mean, obviously they matter, but the truth is the story is really the gap between the luxury and the high-priced houses and the more affordable, which is insane to say under 700 is the more affordable, but you can see the gap there. It's just wild. It's fascinating. So that's why I capture it like that. That being said, let's look at months supply, because months of supply, and remember the way I measure months supply, I don't measure close volume, because again, when you measure close volume, you got to wait for those contracts to close. You got to take the ratio of active listings. I mean, it takes 60 days to get a month's supply with close volume. And then by the time you get it, what do you have? You don't really have anything useful. It's too late. It didn't help inform whether or not you're buying or selling or what the market dynamic is. So here we can see active listings over contract, 4.3 months supply for $1 million listings. Got to go back to January before you saw a number like this. And if it keeps going, we will hit those peaks again. Guys, when you get up to the sixes, it's going to be major price drops. So looking at these all tick up, even as active listings stalled in the 700 million, the contract volume is tanking. It's pushing all of these up. That's why this is so powerful, guys, is because even though active listings may stall out in a price band, or even though there may be the same amount of inventory, the contract volume dropping shows you that there's a lot more opportunity for buyers than there was before the contract volume dropped. It's so important to look at contract volume. It really helps you orient yourself on how strong the market is in your specific area, location, price band, you name it. Really important to look at contract volume. So you can see $1 million listings, 4.3. Traditionally, that's been very tight. When people say it's a tight market, They're right. That's a very tight market. But the trend shows it creates nerves when you start seeing contract volume just tank. People get nervous when they were seeing 5, 10, 15 people come in for an open house. And then 2 weeks later, nobody's coming in for an open house, or just a couple people, or just 5 people come in for an open house. When you start seeing those dynamic changes, it makes sellers nervous. Okay. So we're seeing the dynamic change in the data. It should inform you. Doesn't mean everything is going this direction. There are very tight pockets. This in general is a tight supply, but the trend is showing that I believe we've peaked in prices for the year. You'll see in June, they may hit the same high we saw in May, but after that, as long as inventory, as long as active listings continue to increase, as long as contract volume continues to drop or even stagnates, you're going to see price drops through the rest of this year. And I believe we will make a new low. 450 was the low. I believe we'll make a new low. My personal prediction's 430 by the end of the year. But again, you go out more than 60 days. It's very hazy. I would just say that I am forecasting better than random. That's what I say. I'm stealing that line from Stanley Druckenmiller. He was a very successful bond investor, very successful, very respected guy. He said he forecasts better than random. So I'm stealing his line. Anyways, thank you all for watching. I hope this was helpful. You guys have a great weekend, and I look forward to seeing you next Saturday.